Ladies and gentlemen, please welcome the Senior Vice President of Analytics, Product and Innovation for Fiserv, Dan Parzych.
Hi, everybody. Really happy to be here today. I have a loud voice, so I'll move that microphone away. I had to go out to my car to get the presentation. I've realized in my 50s I can't see far or near, so I wasn't sure I'd be able to see the presentation behind me. I'll comment on the one-pager that's on your table as well. This is we put this together with the Georgia Chamber. The back side is some of the data I'll be talking to you about today. The data on here that's as of April, because we had to have this pre-release, but I'll talk to you about data through May as well. Is my presentation up? All right, enough of my face. Okay, great. So we're going to talk today about the Fiserv Small Business Index. Really, mostly, I have some numbers, and we'll talk a little bit about the trends. I think what I'd like to talk about mostly is how you can access this and how you could use it. I'd love to get questions. Feel free to interrupt me. We're getting a lot of feedback from banks and large merchants around how they use this data. But I'd love to get questions from you and hear about how true small businesses could use this. The backbone of this is a lot of analytics that we do at Fiserv, both for small and for large business and for banks and payment companies. So for those that don't know who Fiserv is, we don't make vaccines. We are quite a large company. We're about 40,000 people globally. We have a large presence in the Atlanta area, up in Alpharetta and Marietta. Our headquarters are up in Minneapolis, but we have sites around the U.S. And you know, I think our newest motto is "We move more than money," right? Embedded in Fiserv is the union of two large companies. First, Data, which is primarily focused on working with businesses and small businesses, and merchant acquiring business. And then Fiserv, which was more traditionally about a payments business and a banking business. And so by bringing the two together, we have this really powerful network where, you know, as you see here, some of these things, number one in merchant acquiring, account processing, mobile banking, et cetera. What that means to someone like me and Savannah and Holly as kind of data nerds is this really deep data about what's happening in the movement of money across the United States. We can measure that for small businesses, for consumers, for households. We can look at lending patterns, growth patterns that are happening both locally and nationally. And it's very exciting. It's quite a journey for us in our kind of centralized data office, because as you guys can imagine, maybe some of you have worked at large corporations before. These are diverse platforms. They're hard to get data in and out of. But trying to create this patchwork quilt to normalize the data and really understand what's happening and bring insights back. Our charter in our group is really, we want to build products that help our customers, but we also have a charter of really being thought leaders and what can we do to help people grow or help economists or regulators better understand what's happening locally. The power of the data, you see some of the numbers up here, it's quite astonishing. Some of these are global numbers, but when you think about billions of accounts, and those are credit cards, 1.6 billion credit card that we issue for banks, or the power of working and understanding patterns across 6 million businesses around the globe, you can get a feel for the kind of work we're doing and the kind of research we're working on. Some of these numbers came out earlier today, and you know, it was interesting to hear the numbers were quoted about Georgia, and they're really identical to what we see in the U.S., which is that about 99% of all businesses are small businesses. Now, a lot of the transactions are happening at Walmart or PayPal or Amazon, But really, when we think about the business population out there, they're represented by the kind of people that are in this room. And about half of our private sector workforce is employed in small businesses. So we're really touching most of the households in the US. And a high percentage of the dollars that we spend every day, $1 in $3, or about 44% of the gross domestic product, right? So small business is moving the US. We see this every day, actually. We closely monitor what's happening in small business versus the large government retail numbers, and we see a really high correlation. And we'll talk about that a little bit more as we go on, but you should feel confident that what you're observing and feeling, there are differences in your localities, but when you bring it all back up, small business is representative, for the most part, of every sector in the US. So we were tasked by our CEO to bring forward a measurement that would kind of leverage the power of the data we had, was something we could give away, allow people to use it, make it easy to understand, and of course, show the prominence of the Fiserv brand, and what we could do to help businesses and banks. So when we look at what we had to bring together, we kind of looked at the ingredients. There's about 2.5 million businesses in our network that we see every transaction happening in. And that's cash, check, and card. Of course, the predominance of it is in card in most segments. And when we measure across the United States, we touch almost every household, right? Because you think about card spending that's happening, and as people take those cards from one business to the next, as you go out your commute, you buy your coffee, maybe you go out to lunch, you pay a bill, we're seeing that transaction happening, and we can kind of understand consumer behavior and shift in consumer behavior. We wanted really specifically to measure what's happening in small business. And so, we wanted to rely on some specific measures that would help us zero in on the small business population. In total, annually, we're measuring about $1 trillion of economic activity. So it's a big pie, but we wanted to carve it up, and I'll talk a little bit about that. I don't know about you guys. I was really kind of amazed by Holly's presentation and the number of facets that they have in measuring the sentiment of small business owners and how they're able to segment it to regions. We had a slightly different approach. What we wanted to do is we wanted to measure not sentiment, but small business performance, right? We wanted to leverage where we have this strength. What is happening in card spend or cash spend in these 2+ million businesses every month? And, we wanted to be granular and usable. So we looked in and we're measuring performance across about 34 subsectors of wholesale, retail, and services. So these are things like we saw in that video. These are landscapers, veterinarians. We talked about a PR agency in Savannah. Professional services, I think, is our largest sector. We measure doctors' offices and subcontractors. And all that data is feeding through our systems, and we wanted to be able to provide that to you. And we'll really highlight that here today. Annually, I mentioned the $1 trillion, but really this is broken down into these kind of, you see the map of the US. These are the zip codes where we see data. And to be honest, the white areas are areas where there's really no people or businesses. So we take that $1 trillion and we really break it down into all these localized areas. One of the unique features as well is that because this is transaction level data, we have this really low latency. And so we've been pushed, and we found a way to do it, that we publish the month's data really we finish it on the first of the month, and we publish it on the second. So our website is always up to date. When you look at US census data or other measurements, they're usually published in the middle of the month or towards the end of the month. Just yesterday, March came out, the advanced monthly retail trade survey. The full MRTS data, when it comes out, will be a 6-week lag. And so you'll have our data with a 2-day lag, which is pretty exciting. And it's funny, when I look at our website traffic, we get most of our website traffic on the 2nd. So people come, they download the data, they take some time to understand what they can find there, and then they move on. They make their strategies for the month. Let me just go back real quickly. I want to comment on the card versus cash and check signal. I think this is a really unique place that's worth talking about. In some sectors, there's still really heavy cash spend. When we think about quick service restaurants, gas stations, it still approaches 40–45% of total sales. And in other sectors, of course, and maybe a lot of the people in this room where we do have credit and we have revolving credit cards and we're able to do most of our spending on cards, there's still a large percent of the population that's using cash. And this is another unique part of our signal. In fact, the only other place I've seen cash measurement was by the Atlanta Fed from a 2019 survey. So the ability for us to weigh in on total consumer spending and not just credit card spending is really important. And it really helps us to have a balanced measure across all sectors. So what is the Small Business Index? In some ways, it looks pretty similar to what Holly talked about. And we're measuring change across a long time series. In this case, what we're publishing today only goes back to 2019. It was great to meet her today because I've been admiring her metric for a long time. And I often say that I hope, 40 years from now, we're still out there. Our index is a year old. We just started putting it out a year ago, but we published data today back to 2019, and we're about to put it back to 2006. And what is it? We try and put out this single 3-digit number that allows you to have a simple measure of, is the small business economy growing or shrinking? Last month, it stayed flat at 151. And what the 151 represents is we had a base period of 2019, pre-COVID, and that base period represented 100. So a 51 means we're at 51% growth since 2019. Now, I think also, as Holly noted, a lot of this is due to inflation. And so on the website, we provide both nominal and real numbers, the real being inflation-adjusted numbers. So we can see. So for example, when I look at restaurant growth across the United States and I adjust for inflation, it's about -2 or 3%, right? So restaurant owners have been really hit hard by the cost of ingredients, the cost of labor, right? So some sectors have done really well. Other sectors have hurt, disproportionately. But when we look at the nominal numbers, they tell a different story that looks like, hey, everybody's growing and sales are way up. And so it's important to take that inflation into account. When you look at, the other thing we try and look at is both the month-over-month growth and the year-over-year growth. So when we look at year-over-year growth, it's important because there's a lot of seasonality in the data, right? So this is a measurement. When we say the small business economy is up 3.3%, that's over same period May last year, okay? But when we look at month-over-month, from April to May, it's only up 0.2%. And there's a lot of factors that go into it, right, and to make us understand that. But let's look at some of the data. So I wanted to here showcase Georgia as opposed to the national picture. And in this chart, we compare Georgia to kind of the surrounding states. This is a mapping of the Fiserv Small Business Index. So it's that numeric number from 2019 on. And so the dark gray line in here represents the US, right? As I said before, the US, the Small Business Index had a value of 151, and we made Georgia this dark red line in here. Go Dogs. And you see Georgia's way outperforming, right? Now, when we look at comparable states around, we don't see this uniform measurement, right? So if you look, for example, the green line here is Alabama, you'll see it's looking more like the national trend. But as we hear in a lot of news reports, the Southeast is doing pretty well, right? And so when you look at many of the other states that we see here, Florida, South Carolina, Tennessee, they're even outperforming Georgia. And so it's really easy measurement to see in that chart. This is this long-term, seasonally adjusted trend. Now, if you look at the table on the right, it tries to look at a more narrow picture. So the gray bar is showing what was the net effect at the end of 2024. So in the US, we saw 4.1% growth across the small business economy for all of 2024. And for year to date, this is through May, we're seeing about 3.9%. So maybe on a similar trajectory. But when we look at the month-over-month change in the US, it was only that 0.2%. So we're starting to see a slowdown in the US economy. And I think we're all feeling that, right? The effects of uncertainty. I think Holly talked about a lot of these from a sentiment perspective, and we're seeing that in our data as well, right? We saw a surge in spend in February and March as people were worried about the tariffs, and we're starting to see a slowdown in that spending. Now, when you look at Georgia, which is just the next area here, we see a slightly different trend. So for 2024, we grew at 3.7%, which is about the same or maybe 10% lower than what we saw in the US. But for the months so far of 2025, we've grown at this 10.9%. So really kind of explosive growth through that first quarter and into the beginning of the second quarter. But you see now this major slowdown. So now it's not a positive 0.2%, it's actually this negative 1.5%, right? So again, this feeling of uncertainty that's starting to affect how consumers are spending or how businesses are spending in those areas, right? I mentioned before, wholesale, retail, and services, right? And when you, and I'll get into some of this in the next page, where you can look at, or the 2 pages up, where you can look sector by sector and understand what's happening. Any questions on this? I know this is a little dry, except for any other economists in the room? No? Okay. I do want to get to how maybe this could help you. So the other way we cut this data, so we have this great ability to look at every transaction separately, every business separately, and then to summarize it up to a sector and a geography. So here we looked at some of the larger MSAs here in Georgia. And so you'll see here the dark gray line here is representing Georgia, but we're able to break out Atlanta from Augusta, Columbus, Rome, and Savannah. And you'll see very different growth rates. Now, this is not measuring the absolute magnitude. This does not mean that Rome has a larger small business economy than Atlanta, but what it does mean is that it's growing faster, and it has grown at a sustained faster rate than the other MSAs that we're representing here. I got the 10-minute signal, so maybe you guys will be happy to hear that. Okay. This is where I think it becomes much more interesting. So when you start to look at the intersection of geography and sector, and this is like the highest level sector, right? As I said before, we look at 34 subsectors, and soon we'll have about 55 NAICS 6 geographies, which are really nitty-gritty, like shoe stores, dentist offices, like very small sectors that you can measure. But here you can start to say, what's happening in my local economy? I was pretty pleased. I grabbed the chart right away to see, we talked about an ad agency in Savannah. You see professional services is growing at 31%. So hopefully that's representative of her business, which is great. And in Atlanta, professional services is growing at 22%. And in general, professional services has done well this year. We've seen that. And professional services measures lawyers' offices, accountants, ad agencies, all the kind of white collar but small business jobs that we have out there. It's one of the largest sectors in the US economy. And it's generally done pretty well. But when you look at other sectors, you might see a different story. When you look at wholesale, for example, Augusta looks pretty strong at 12.6% growth. But when you look at some of the other sectors, other areas like Rome or Savannah, you actually see they're declining this year, right? And this is kind of the richness of the data that's available and for you to go work with. You can target your local area, and you can kind of understand what's happening, both in your area and other areas. The way we're using this with banks today is for them to understand their trade areas, to understand their balance of their deposits, where they should be trying to get new members to join their bank or credit union, but also where they should be investing. When I talk to bank presidents, especially local banks, they want to make sure that no industries are left behind. And so who's struggling from a sales perspective, and how can this data help them to understand where they need to be reaching out? This was an interesting study I just wanted to put out here really quickly. I mean, obviously last year we were hit hard by 2 hurricanes, and we were tracking that and measuring that. Again, just for us, from a thought leadership perspective, we wanted to get the data out there. We ended up, though, using this data in a partnership with the U.S. Chamber of Commerce to help their foundation understand where they needed to bring the dollars to help small businesses. And so when you look here, when you look at the different MSAs and where we kind of all know where that hurricane path went, you'll see the red number is kind of the pre-hurricane. What did things look like for the couple weeks before the hurricane? And then the black was what happened in those first couple days. And then the blue was kind of how are things going in the weeks afterwards? And the data just jumped right off the page for us. Now, we were measuring it in real time and feeding the data to them in real time. Obviously, you know, when you look at Tallahassee, Augusta, Columbia, South Carolina, Chattanooga, Asheville, when the hurricane was there in those couple days, people were not leaving their house to go to a restaurant, right? But when you start to look at what's that long-term effect, the data just comes right out. And when you look at, for example, Asheville was at negative 37%, right? This is real people spending money in the stores, down 37%. And I recently went back and looked at Asheville, and it's still down from a 5-year trend. We just recently pulled this for the city of Los Angeles with the, I got a call from our internal security team to say, hey, are there any small businesses in LA that are impacted? So we ran a report like this. We saw that on Saturday, with kind of the initial ramp up of some of the protests, there was a big loss in sales for many of our merchants. And so our security team pulled a list and they went out to talk to them to make sure they were okay. So it's pretty exciting to see the data used this way. I'm going to start wrapping it up. I want to leave a little time for questions if anybody has any. I know this is pretty dry, but I threw some ideas out here. Let me actually go to this page. If you come to our website and there's a QR code at the end, we make the data's there for free. So we have a visual chart you can click on and drill down into Georgia or other states. You can drill into the sectors. You can look at different time periods. Just this year, we launched an AI assistant. So if you don't want to download a giant CSV file and do pivot tables in Excel, then you can use our AI assistant. So you could ask it a question like, what's the sales trends in restaurants in Macon compared to Atlanta for the last 2 years? And it'll write up an answer for you, it'll give you a chart, and you can download the chart and the data. And again, I've been spending a lot of time with larger merchants. They're using this data to think about where should I be expanding, right? Where can I expand my reach? What are the areas that are seeing some success? Or, you know, there's a need for my kinds of services. We're talking to banks about how they can use it to invest in local businesses, but we're still trying to find what's that magic ticket for small business. There are some things we're doing around small business peer benchmarking to help people who use our products to understand how they're doing relative to their other businesses. But I really want to see this as a tool that a small business owner could use either to understand the economy around them, to understand should they be growing, where they should be growing. But to me, this is a great opportunity to hear directly from you as well. So that's the Fiserv Small Business Index. Here's the QR code if anybody wants to go to our website and play with the data. And I'd love to hear any questions or hear any suggestions from you. Thank you. Holly, you have a question?
When you were showing the chart that had the construction in different cities, and Atlanta had, I think it was -6% from 2023 to 2024. For some of the construction, do you have a sense to whether that is a decline in demand for office space or things like that, or is it the inability to find workers and so they're not able to pursue some of the construction projects?
Yeah, I think you have to remember the signal that we have here. Again, this is going to be card, cash, and check spending. So when you see construction here, this is not large commercial construction. This is going to most likely be subcontractors. So this is people spending money with plumbers, carpenters, et cetera. Could be like local builders or things like that, but it's going to be more small business there. Some of it's going to be demand and some of it's going to be other factors as well.
So that ties into the Augusta numbers. When I'm looking at that growth in construction for 2023, 2024, is that probably a good, like, because of Hurricane Helene, with construction having to come in to rebuild?
Yeah, it certainly.
As well as wholesale?
Yeah, it certainly could be. We saw a surge in wholesale again this year in advance of the people's concern about tariffs as well. If you go to the website and you dig in Augusta, you'll be able to drill deeper on the different sectors inside construction and see what's actually driving that growth. But it's most likely, you're right, it's probably subcontractors and post-hurricane spending. Yeah.
First of all, let me applaud Fiserv for putting together this data. This is incredible, incredible.
Thank you.
What is the definition for small business?
I didn't cover that. So we actually use the Small Business Administration's definition of a small business. They put out an industry classification table, and they give you a really clean definition both by number of employees and by revenue. So we do it by revenue, right? Because that's what we're measuring. So we're really lucky there. And what we do also is we didn't want this to be a Fiserv measurement because obviously our coverage changes. So we use census numbers to understand the true small business population in each geography. The lowest level they give it to us is at the MSA level. And so maybe we have 10% coverage of dentists, but they tell us there's 100 dentists, you only have 10, right? And so we're able to estimate the total sales in dentists within any given geography. Okay, I think I've overused my time. I didn't see anyone fall asleep, so I'm thinking that's a success. Thank you for your time. Please, if you want to learn more about this, come talk to me, find me on LinkedIn. I'm happy to work with you, have my team work with you to help you use this data. We'd love to learn more about how we can help small business. So thank you.